I'm John Kosar, Chief Market Strategist at Asbury Research. Thanks for listening to our latest Following the Money podcast. Today I'll be talking about what our latest analysis and data-driven models are saying about current financial market conditions. That is, when to be on offense and looking for opportunities, and when to be on defense and protecting your capital. Today is Sunday, September 10th, 2023. Now let's follow the money. The benchmark S&P 500 is parked in neutral right now between major overhead resistance at 46.37, which was tested and held on July 27th, and formidable underlying support at 43.25, which was tested and held on August the 18th. Our analysis strongly suggests that the next significant 1 to several month directional move in the U.S. stock market, either up or down, is likely to begin from this window in between 46.37 and 43.25. Meanwhile, our key tactical tools, including the Asbury 6 and the correction protection model, or CPM, are also screaming to us that this is a near-term directional decision point for the stock market and an emerging opportunity to get on top of the next trend at its early stages and potentially capture most of the next big market move. Asbury Research subscribers can get the latest updates on these metrics as we track them in Asbury Research's Research Center. Asbury Research is just weeks away from launching a new and improved version of CPM, the correction protection model. This version goes back 7 years. We've back tested it 7 years, and it includes some new metrics to account for recent changes in market behavior. This version stays much closer to the S&P 500's performance on the upside, while still being able to retain most of the current version of CPM's very good ability to avoid drawdowns. Now let's move to sector rotation via our SEAF model, which follows the money around the 11 sectors of the S&P 500. SEAF is an acronym for Sector ETF Asset Flows. SEAF retains its late July overweight in the energy sector, or XLE is the ticker, which we have mentioned in the past several Following the Money podcasts. XLE has since risen by 5% outright, while outperforming the S&P 500 by 8%. There is also a new SEAF long/overweight signal heading into this Monday's trading session due to recent movement in these investor assets. Premium subscribers can view the SEAF model's latest overweight signals by visiting the Research Center, as well as have a look at our new rainbow charts. They're the accompanying charts for the SEAF model, and they display the historic trends in investor asset flows around the sectors of the S&P 500. Now let's take a look at domestic asset allocation via our CARP model. CARP is an acronym for Cross-Asset Relative Performance. Through the end of last week, just 2 of the 8 equities-related relative performance comparisons in the CARP model are offensively aligned. This suggests that investors are not nearly as certain of a market positive outcome as they were during the first half of this year, and may be slowly moving towards a more defensive stance in the market. Next, let's take a look at global asset allocation via Asbury Research's US versus the world model. Our model tracks the US S&P 500's performance versus 25 foreign equity markets. The model currently shows that just one country, India, is currently outperforming the US on both a tactical and a strategic basis. For us, tactical is monthly and strategic is quarterly. More broadly, the current lack of relative outperformance around the globe versus the US clearly indicates to us that this is not a good time to be investing in international equities. Finally, I wanted to let you know that I will be a speaker at the 3rd Annual FX Evolution Conference on September 23rd and 24th at the Wynn and Encore Resort located on the Las Vegas Strip. My topic will be Enhance Your Technical Analysis with Data-Driven Models. I will be talking about our newly updated correction protection model, as well as discussing the latest signals in our SEAF model and some of the other models that we have here at Asbury Research. I hope to see you there. So there it is, our latest bi-weekly Following the Money podcast for today, and a short synopsis of what we think is particularly important to pay attention to as we move into the fall months. We'll see you again right here in about 2 weeks with our next Following the Money podcast. In the meantime, Make sure you subscribe to Asbury Research on YouTube for more podcasts and data-driven trading and investing information just like this. If you are interested in subscribing to our premium content, you could use the contact tab at asburyresearch.com to request further information, including service and pricing options. Now we closed with the legal stuff. This podcast is provided for information purposes only and is not intended to be a solicitation to buy or sell securities. The performance indicated from backtesting or historical track records may not be typical of future performance. No inferences may be made and no guarantees of profitability are being stated by Asbury Research LLC. The risk of trading and the risk of loss in financial assets can be substantial. Therefore, you should carefully consider whether such trading is suitable for you in light of your financial condition.